Hey everyone, it's Matt Donahue coming to you live with our weekly market update. Today is Monday, September 9th, and we're going to recap last week's news and give you a little bit of a take on what's coming up this week. So last week, hey, August was great until September came, and stock indices saw some pretty big declines. Nasdaq was down almost 6%, S&P was down 4, the Dow was down almost 3. Tech stocks were hit the hardest due to concerns about short-term AI profit potential. There was mixed jobs data. The U.S. economy added 142,000 jobs in August, which was below expectations. Expectations, by the way, were for 160. Revisions for June and July also lowered previous estimates by about 86,000 jobs combined. Yields were dropping last week as well. The 10-year Treasury ended the week at 3.72%, down from 3.92% the previous week, and that is because of expectations of the Fed's rate cut coming on September 18th. Crude oil prices, fell nearly 8%. They got all the way down to $68 a barrel. That's the lowest in 14 months. And that's due to concerns about demand in the US and China. Volatility jumped quite a bit. The CBOE Volatility Index jumped 49% for the week. That closed at around 22, which is still below the recent peak of 39 in August, so August 5th. Small cap stocks underperformed large cap peers, with that Russell 2000 falling nearly 6% last week, hitting its lowest level since August 14th. Q2 earnings, utilities led with an earnings growth average of 21%. Across all the S&P 500 sectors, earnings grew by an average of 11.3, the best result since Q4 of 2021. Price check ahead. The upcoming Consumer Price Index report will be a key factor for the Federal Reserve as it considers its rate cut in September. That's coming up just in about 10 days. Some tax tips for you as we get into year-end planning. And actually, if you're looking for year-round help, I should say, there's IRS Free File, which can help you prepare and e-file a federal tax return for free. There's a Where is my refund tool. Direct pay, you could pay tax bills directly from a bank account. There's an online payment agreement where you can set up a payment plan. There's a withholding calculator where you can adjust your tax withholding to avoid a large refund or maybe even owing taxes. And then a get transcript tool, among others. So there's a lot of tools that the IRS makes available for you. Keep in mind, though, you should always be talking to your tax professional. And the reason for that is, hey, first of all, you're paying them. But second of all, they know the rules. And working with a tax professional is going to be key to ensuring that you're really on it in terms of where you should be from a tax planning standpoint. The philosophy quote of the week is one of my favorites. So whether it's taxes, whether it's, hey, the market was down last week, and by the way, it's roared back to life today. We'll see where it ends today and how this week goes. But the philosophy quote of the week is, and I'm going to paraphrase it. You can read it on our blog. You can read the whole quote, but it is, you have nothing to fear but fear itself. Now, all of us who are into history and pay attention to that kind of thing, we all know Winston Churchill said that in 1940 when the British were going alone against Nazi Germany. But the Stoics were thinking and talking that way almost 2,000 years ahead of time. So what does it mean? Hey, you know what? It's like we're always talking about, right? You get yourself riled up about things. Who do you really have to blame for that? You're letting your emotions run away with you. And fear is a really powerful emotion. So from that standpoint, what do you really have to be afraid of? Well, a lot of times, as we all know, things seem to be a lot worse than what they really are, and things usually are not as bad as we feared they would be. So keep it in check, right? Keep it in check. Last week, the market tanked. This week, the market's roaring back to life. You've got to be consistent in your approach. You've just got to have consistency, and don't let things derail you. Don't let things derail you. Okay, Life Insurance Awareness Month. Last week we talked about the importance of having insurance, whether it was life insurance, disability insurance, long-term care insurance, property casualty insurance, because that protects your life, right? It protects the things that you want to make sure happen. Well, from a financial standpoint, life insurance really is a fiscal safety net, right? It doesn't just cover expenses, it can also cover lost income. From an emotional standpoint, it means that your family knows they're going to be secure financially and they don't have to worry if something should happen to you. There are essentially three broad types of life insurance that are out there. One is called term insurance. Term insurance is exactly what it means. You're covered for a term or a period of time. And that's going to be short term issues that you're dealing with. So, for example, those of you who know me, I have two wonderful kids. They are now 11 and 8. Financially, I'm really just concerned about the next 15 years. They'll both be out of school at that point, and my wife and I are always saving, so we're not really worried about what happens after the kids are gone. Really, 15 years, both kids are out of the house, both are done with college. Hey, we're good. Term insurance, hey, that's a great tool for ensuring my income, making sure they can go to college, things like that. Whole life insurance, on the other hand, is permanent insurance with a cash value that grows over time. And where whole life varies from other types of insurance is whole life has the most guarantees, where the insurance company is essentially going to guarantee that your coverage will be there for your whole life. That's where the name comes from. If you pay your payments on time and if you follow the schedule of your payments. That's it. They guarantee the policy cash values will grow in value over time. They also guarantee the coverage will be there as well. If it's what's called a participating whole life policy, you might be able to get additional cash value buildup and additional insurance at no extra charge through the dividends that the insurance company is offering. That can get a little complicated, but if you'd like to learn more, just let us know. Universal life, where whole life is all about the guarantees, universal life is all about flexibility, flexible premiums, flexible death benefits. Can some universal life policies build good cash value? Sure, some can, but not all of them do. So you want to make sure you find the right thing for you. Riders are super important. If you're buying insurance, always ask what riders are available. Probably the three main riders we encourage people to look for: um, long-term or chronic illness rider, so long-term care or chronic illness rider. Second thing is what's called waiver of premium. Whereas long-term care will help pay long-term care expenses if something happens to you. A waiver of premium, after a holding period of say 90 days, the insurance company will pay the premiums for you if you become disabled. And then a third one is what's called critical illness. Critical illness is, let's say you're diagnosed with cancer. Okay, you might be able to get a lump sum from your insurance policy because you have a critical illness waiver. So lots to think about this week, right? But it does kind of come back to that philosophy quote. If you want the quote in its entirety, here it is. But there is no reason to live and no limit to our miseries if we let our fears predominate. That comes from Seneca in his moral letters. Well, everyone, thank you so much. Have a great rest of your week. Keep your chin up. Don't let the markets rattle you. Stay invested, and we will see you all next week. Thanks again, everyone. Bye-bye.